The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, Friday the 11th. Friday the, what did I type today? 12th. And I want to go through a kind of a review, just in case I have a little problem on Monday. Everything seems to be okay so far, but there just might be a problem in actually doing the show at that hour. So just in case, I'm going to do a kind of an overview. And let's go right to the numbers. At this particular point, what we got is the Dow is up 16 at 15,477. Of course, it's 11 o'clock Eastern Time on Friday. And there's an unchanged S&P. So let me just run these numbers here, because I think it's very important at this particular period. I did Steve's show earlier on, and the question came up about when I get a quick peak C to D or D to E in the monthly charts, what are the chances of coming back down quite sharply? What is the implication? Is that a historical norm? And I'll cover that now. Most importantly, the S&P futures are in leg B and have extended leg B. The Dow, INDU, has extended leg C. The S&P, this is in the Chapman Way methodology, I'll explain to you in a moment. The S&P has extended leg C. This is very positive action. Excuse me. And what's very important about what I'm looking at here is that if you go to the IWM, this is the Russell 2000. Not only is it extended. I have no other way of counting this in the Chapman wave but to call it leg B. And it's in leg E in the weekly chart, and leg E in a very quick D to E in the monthly chart. If I look at the Qs, 1, 2, 3, leg B is extended. There's no other way. From the low bar of 69.84, it's called a floating ladder. In this case, it's gray until it makes a new recovery high, and that would be A. That's floating A. There's no, and there goes peak A, because why? The high in the Qs at 72.30 on the 1st of July. On the 2nd, there was a 72.18 high, and that is 12 cents lower. So that becomes a peak. Then, the moment it crosses 72.30 and goes to 72.31, we start sliding leg B. Or better to call it floating B, because why? It floats above the letter until there's a peak, and then it's officially a peak. So this is leg B / E. Why do I put an E? Well, first of all, the power of this move is such that I'm calling it a buy mode, with the implication that it's going to go higher. The other implication is that once you get above the previous peak of peak D at 74.95, if you're looking at my charts, I'm showing it to you here. This is the left side chart over here that I'm circling, is the daily chart of the QQQ Power Shares QQQ Trust Series 1. Now, what's important about this is that the previous major low on the left side was at 66.88 back on the 18th of April. So the pullback here that hit exactly on the 200 period exponential moving average says that the power of this move of that 200 period moving average together with the MACD and stochastic needs to see the 9-period exponential moving average challenge, which it was. There it is, that black line. It broke above it in peak A. It pulls back, holds it. Oh, I love this. Just look at the way he just holds it as support. 9 EMA, breaks above it, and now it's gone to leg B. I include this now. I've over the last, I'd say, couple of months, I've been making an emphasis to, as much as I can remember, because it's such an old habit that I got to have to reprogram, that if my thinking is that the new alternate count has a favor as a bias is leaning towards the new notation, in other words, B, then that automatically becomes leg B first with a slash, forward slash, and E second. Why do I have to put the E in? Because if the stochastic only went above the 80% level for more than 3 to 5 sessions and then went under to about 73% or 77%, there's a good chance that it's called a right arm extension failure, and that would be leg E slash B, and then as soon as it took out the 9-period moving average, probably at about 73.32, I'd have to say, uh-oh, that's a failure. We're going down. That was the last rally. But everything here is in 93% in the stochastic. Hey, I will not fight that. I will not short something as powerful as that. So I thought I'd go through that. I want you to go through that. But this is also very interesting. Look what's happened. The weekly chart, that falling axe pattern, remember this is a pattern that I spent a lot of time talking about for weeks now. That's been unfolding. Breakout to new highs. Now, look at the QQQ Trust Power Share Series. At this day, today, is the highest level that it has been at since, now watch this, squash once, twice, 3 times. 120.50 was the old high back in March of 2000. And it kind of pulled back to $19.76. That's what nearly 90% decline. And now it's in a retracement mode. And it's holding the wedge, it's breaking out of the wedge. Very positive. Where would the likely target be on the left side? This is really tough because we came straight down. I'm not going to say the high of 103.97 back in September of 2000. Remember in September, from the March to about September, October, the S&P and the Qs had a lovely retracement rally. The Dow didn't do anything like that. So that would be the level. No, I can't say that. This is the candle that I'd be looking at with a long wick of 74.78. We've just taken that out, but it needs to close above that in July. That'd be very important. That's the candle of December of 2000. But if it takes it out, then I have to start looking at something completely different. I have to look at the next bar, and that is way up at 84.94. I don't want to get too carried away. I'm very close. By next week sometime, there's a chance I'm about to get a sell signal in the daily charts of most of the indices. So I don't want to get too carried away here. What I do want to say is that I'm looking at so many charts that have extended in this last move, the surprise move to the upside, let's call it, this last 1,000 point to the upside that occurred 2 Mondays ago, started 2 Mondays ago. Now, let me explain something. In my work, in my opening call, that is my daily service, very, very comprehensive service. And I constantly notate the charts so that my subscribers know exactly, they understand exactly what I'm looking at. What am I looking at? Why am I looking at it? Why is it a notation? And I usually try to explain it. So this is leg C again. The 15,483 level of yesterday's taken out. I remove it. I don't know what the high is going to be today. So far it's 15,498. In my work you can see I talk about the resistance right there. And resistance is in the 15,547 to 15,490s initially. So where did we go today? We went to the 15,498. So that's the kind of comprehensive look. I look at the markets, give on most parameters on most of the indices. Now, there's something else. We've got until, what's today? 12, 13, 14, 15. We've got until Monday to attempt to get close to the 15,542 level. Why? Because the technique that I use, Chapman wave left side, right side price time match. Chapman wave inside wedge. I drew that ages ago. That is the target line. That is the resistance line, the left side to right side. This is the time match. I use a particular bar when I'm doing that. If the bar isn't obvious, I find a bar that is the most important. And I drew this in some time ago. So we've got until Monday. We've already accomplished much of what I was looking at because we are now within so many, we are 50 points away from, less than 50 points away from all-time highs. So this is a pretty good indication. These are the notes that I make. Actually, there are tons more notes underneath this. I still put in a block with updated comments. It's just one of the charts. Now look at this. Excuse me. Here is the 120-minute chart. The 120-minute chart of the Dow Diamonds hasn't made its peak C yet to go to D. The stochastic's at 93% and the MACD is very good. So it's very close to a bit of a pullback. Pullback at 153.73, about 60 to 80 cents away from here. That's something to watch. Very important. Now look at this. Everyday update this one. This is just a very simple bar chart of the Dow, bar chart of the S&P. Both are making the extended leg C above the falling axe formation. This is the TRIN. This is Richard Arm's fabulous TRIN index, it's short-term trading index. I use it in a different way. And what it said yesterday was, be careful. There's a good chance that even though the futures might be up and all, we're going to have some kind of weakness and the Dow should go negative. It's already gone negative today. Not very much, but it went negative before the rally attempt occurred. I still think that we could, I've got a close on the day that says we should have some kind of doji type candle. Very narrow close. Now look at this. The volatility index, the VIX, this is a 120-minute chart. Look how beautiful the symmetry between the one running up, the Dow Diamonds running up, the Dow Industrial Average index going up, and the volatility index coming down, except it's starting to find support. That tells me, after a sip of tea, that tells me that the volatility index is getting ready for some kind of a bounce. But that might just be an initial bounce. The real bounce will come when the volatility index visits the 16s again. Right now it's at 13.87, not even close. I suspect we will get there, but I'm not yet sure. And on what's happening today that is of great importance. I will come back and we'll be looking at some of these things. I want to look at gold, but here's a chart that I managed to update in a completely different way. Thank you, Stan, for helping me from TradeStation. At US, no dot. I've redone this chart now. I don't know why it doesn't go back the same length that my at US.P goes back. That goes back. It goes back to 1981, I think, or 87. That's the bull market. Look, there's that bull market that we've had in bonds. And that bull market went out of the channel and came back into the channel. That's very important action because why? It took out what was the resistance area, which then became support, and now the 9-period moving average is resistance. But let me show it to you. It's a lot clearer in this chart. This is great to find this. Now, I have different notation, and I'm a little surprised. I need to just double-check something here. That is 1932nd 15. I knew I missed something. There it is. Folks, we'll be back and we'll be talking about bonds. We'll be talking about the transportation index. We'll be talking about a number of things as soon as I get back. But you can call it 877-927-6648. And yes, I will look at IBN. IBN for Nancy. Yes.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians out. Just trying to finish this chart. I used to have this one done. I knew it very well. I haven't looked at it for a while. All right. So, question in the den was IBN for Nancy. And that's a cheeky, I've never heard this actually mentioned. A cheeky bank ADS, a CC maybe. This, I thought it was an Indian bank. Maybe I'm wrong. Anyway, let me just put ICI bank. It is an ADS. Business banking, business, personal. The ITC Bank, why don't they tell me? Someone in the den will probably tell me. Yeah, I just want to know which country. Whoa, this is not very articulate, is it? Mumbai, India. Yep, I was right. Okay, Indian Bank. I think I said Indian. Yeah. All right. So this bank right now is trading at 38.32. Symbol is IBN for Nancy, not IBM. And it's bounced a little bit from the low that it just previously made. It's in new leg B up. Let me put that in, leg B right there. And boy, this pattern, I have to tell you, we've seen it so many times. A little cup formation. A little cup formation that turns around, becomes another H formation. And then all of a sudden, it bounces, but it doesn't break the previous left side high. Okay. I forgot to ask the question in the den zip. Are you long? Looking to go short. Yeah, I'm going to suggest something. Have a little patience. It is technically oversold enough that the MACD has now turned up. The stochastic has turned up. I'm not sure it's going to go too far. I would start to think about shorting between 40.47 and 41.38, and it's at 38.31 right now. Give it a little bit of room. Now I'll explain what I'm looking at. The monthly chart is kind of in the middle of everything, but it's done a very quick A to B to C to D, peak D. This is the third time, and peak Ds have almost always been, since 2007, since that high, peak Ds have had a significant pullback, and then maybe there's a bounce, but then it continues in a one-to-one down relationship. So I like your idea. I'm just not yet sure that I would do anything, because he wants to retest that 200-period exponential moving average that has been fantastic resistance and support, which is now at about 38.50. So it's at 38.32. Wow. You see, if you're right, it has to start down by Monday afternoon. By Wednesday morning, the latest, it's got to be down at about the 36 or lower level if it's really going to work for you, because it's been smashed from the 48, 49 area way down to the mid-30s. So I would not be in a rush to get into it, because it could continue sideways. You've seen how you can consider it as a rectangle formation. Unless it really breaks out, it could be stuck in this rectangle formation, make it a little wider to the gap. And I would give it room. So I'm going to say to you, please remind me. I'm going to put it into my notebook. I'm going to put it in for way late next week. And I'm putting it in red. If I put it in red, it means down. If I put it in green or just regular pen, it means up. Don't do anything yet. I think you're absolutely on the right track. I would not touch it. But please remind me next week to look at it. So the next question was LinkedIn. Hurts me to do this, because we wanted to get back in. We had a fabulous trade, didn't get back in. It's in leg D. See, this is one of the reasons why, just on the shorter term position going into next week, I think we're becoming a bit extended. It's going to be more selective. It's had a fantastic move back. It's about to make leg D. Oh, I wanted to trade this. A leg D above 202.91. It's only got 3 points to go. It's looking great. Don't do anything yet, but this is what I'd recommend. The throat is not quite right yet. Hold on. There it is. I'm going to recommend that if you're in it, start taking a little bit off. Either you could do it now, or what you could do, trading LNKD, trading at 199.42, up 2.89. Wow, I just don't see. No, I know what I'm going to do. Keep your core position, and on one part, just one part, because this is one of the best stocks. This is what fund managers are going for. Stay with the trade, but on one part of your position, raise the stop. At first, make the stop on that smaller part of your position for now, until it crosses 202.91 and goes to 202.92 or better. I would say to you, hold the stock. On a shorter-term basis, 195 to 193. Take a little bit off if you want, but definitely as it breaks into the 203s, raise the stop on some part of your position to about a 2 points, a trading 2.5 point stop. You will be stopped out, but you'll be stopped out at all-time highs. But keep your core position, and that little bit you want to put back, because this is a fantastic stock. LinkedIn. Folks, I'll be back. We'll be back with Lou and Nasher as soon as we get back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Yep, the market's just having this kind of stalling formation right now. We're looking at the Dow 7, S&P's down 0.46. The Qs actually are still right around the unchanged level, down 5 cents at 74.92. Fascinating market. Had a huge run up, and now I think some profit taking, a little bit of a rest before the weekend is quite in order. I'm still looking for higher prices. It's just, that's the way it is. So we're on right now. We've got Lou in Nashville. Hi, Lou. How are you?
Fine. How are you?
Very good. Thank you.
Could you look at the euro currency?
So I'm looking at the euro pair, if you don't mind, EUR-USD, and that's the Forex. That's the way I always notate these charts. Is that okay?
Yes.
Okay, good. So there's a pattern that I've often talked about over the years, and that is, it's called the single leg A up. It means that out of the blue, and usually it's out of the blue, this is a news event, in this case it was the Bernanke event, whatever it is, there's just a spiral to the upside, and you get that in the futures very often. It can happen early in the morning, at 8:30 when there's a news event, you get the spike up, and then it takes a period of time, and you just see it going to lower lows and lower lows until it gives back all of the gains. Well, I'm looking at this and I'm saying, the euro has had a beautiful base built up in the daily chart. I'm not sure that too many charts show this, but if we go back back long enough, and you look at the daily chart, you will see that that whole area around 1.27 has got support. It just keeps coming back, and then it bounces, comes back and bounces, and it did it again. Went to a slightly lower low this time. It went to 1.275. The last one was 1.274. Oh, it's a slightly higher one. But there was that spiral to the upside. And I typed in here, single leg A up syndrome. Whoops, syndrome. And one of the reasons why I typed that is you want to be aware that these can fail, and there are certain contingencies, certain things that we can look at. However, what I'm looking at really is that the dollar made, and I just got an email as we were on with the show here from John, who said, neat chart, UUP, three things. Perfect peak D pullback. So this is the dollar itself, went to 84.75. The Chapman wave, what we look for are four higher peaks. Capital A, capital B, C, D. At D is where you can, but you don't have to. But at D is where you can get quite a sharp pullback. The last one went to D, and then just a nominal E, and then it pulled back very sharply from 84.50 to 80.50. So now when I'm to double bottom 80.50, now it's gone to 84.75, just fractionally higher. So I'm looking at the dollar and I'm saying, that 200 period exponential moving average is way down at 81.80. The fast-moving average of the MACD, that's in this chart here, the daily chart, folks. What you can see, look how wide it is, and then it comes back down. If it deflects higher, it could allow the dollar to bounce a little bit and then come do a retest. Why I talk about that, excuse me. Wow, it's a persistent cough. There you are. Is that the stochastic is at 67 and pulling back sharply with no sign yet of finding a bottom. And now I can say, okay, let's put that together. If you don't mind, I'm going to put it together with gold. And I've got gold right now at 1279.70, having made a peak B if there's no new high today, with a slightly higher arch formation. And I'm calling it an arch formation until it really proves to me that it is trying to form a breakout like that. Now, I haven't gotten very excited about the moving gold because I emphatically believe that major turns occur with V-shaped bottoms and not this kind of soft putzing around. So by Monday, if gold is not in the 1286 to 1292 area, but instead starts to pull back again, I will have a perspective on the gold that says it could go up, but not very much in percentage terms. I want to see if there's a power move, a follow through, going into Monday afternoon, Tuesday. That's going to be important. Now, why am I spending time on it? Because I think you know, Lou, that if the dollar pulls back, you will see the euro start to move higher. So at this particular point, there's a high risk, just based on the chart pattern, that says if you got in at 1.3, 1.2985 is the 9-period moving average, very important low, that if you break that and close under it, that'll say, whoops, you got to be careful, could go down a little bit more. The low today is 1.299. So here's what I'm going to say, and I want to give a bigger picture on this. If you're going to go long the euro, I'm going to suggest different ways of doing it. The first way would be to grab some right now at 1.3047. But it's really a very small position. And you've got to know that this position is the highest risk. Why? Because it's great 2 sessions of up move based on Bernanke. And I have to say, I want to see the wick of yesterday's candle. This is what I call an inverted Chapman wave, inverted Roman candle. If at any point in the next 2 days it gets up to 1.315 and it can hold there for a good 3 to 4 hours as the dollar is pulling back about the same amount, I would say to you, great. That is the most important. That is fabulous action. Why? Because it says, it doesn't tell you how much, but it says there's a real good chance that the MACD is going to turn positive. The stochastic is going to move from 39% to about 47 to 52%. That'll be very good. And then it says, now I've got a left side, right side potential price time match to the upside with we go step by step. It'll be about 1.32 and then 1.34 as targets to the upside. But you can see, I have to say to you, do it slowly. Because if it starts to fail by tomorrow or Sunday night, something happens and it starts to tank, and Monday we come in and it's down at the 1.27 or 1.297 or 1.295 area, then it's got that pattern that says, oh, be careful, the dollar still has too much strength. I want to see proof. So if you want, you can start a little position here. The reason why, things happen overnight and you've got to take that risk on Sunday night, that things can happen with a gap up or whatever it is, we're not sure. But I do like the pattern that's forming as a potential to go back up. At this particular point, my 120-minute eye says, whoa, it's got that H pattern, but it is holding the 200-period exponential moving average with 1.30093 as support. So I think it's a good risk to reward, but only on a very small position. Where would I add to the position? Probably if it gets into the wick of that candle, but even more importantly, 1.31215 was the level yesterday where it turned around and made that H formation. So a close on any 30-minute bar, 10-minute bar above that says you're in the right position. If you want to add another small position, you can, but do it small little bits at a time. And the reason is that when if it does work for you, it can be so quick that that's not when you want to be putting on the trade. You'd rather have a little bit of a position here. Now, I don't usually, with the futures, with the currencies, I usually like to get the trend, and then it's easy to make the call. At this point, we've got the first sign of a trend, but we haven't yet had the full follow-through. That's really what I'm saying. So I hope that helps you. The idea is step in a little bit and then add on strength. Don't add on weakness.
Right.
Thanks so much for calling. Good call.
Thank you. Thank you.
Thank you, Lou. Good luck with the trade. So let me take a sip of tea. It's interesting. Last night I played some chain music. First time in quite a while. Just got the chops together to do everything. I was a professional clarinetist for a very long time, professional musician. Had a chamber group, conducted a chamber group, and we used to commission pieces, all sorts of things. So it was fun playing last night. Mozart and Max Bruch. Most of you have never heard of Max Bruch, but what beautiful pieces for clarinet, viola, and piano he wrote. It could also be done with cello, but it's originally written for viola, and they were fabulous pieces. And the Mozart Trio, Kegelstadt Trio, it's called. It was written for friends of his who were the son and daughter of, I think, one of the dukes, and it's called the bowling. Bowling alley. It's a bowling called the Kegelstadt, the bowling trio, because the deal was that he would go there and bowl, but then they would play some music afterwards. Must have been a young clarinetist, must have been really good to be playing that, and the viola player who was Mozart himself. There's some fabulous parts for the viola, but actually everyone has great time. The piano has a whole bunch of solos that are just like little concertos. So we had a great time. Now, let's do a couple of things. I had another one, YNDX. I don't know anything about YNDX, but I do want to go to that, and then I'm going to go to something that I've been wanting to do. I just typed it in correct. YNDX. I guess I don't know this one at all. I keep typing the wrong thing. So the daily's good. It's in ABC to the upside. New buy mode in the daily. Weekly is very strong. So this is A, B, C, completes to the D. It goes to A, this is B. Oh, good eye. Who was that? Good eye, and that was Yo in the Den, I believe. Yes, very good. Excellent. So I love this. You're going to, folks, keep an eye on Yo. He picked some real winners. We've got some great callers in the Den. I mean, Zip, nice one there. Got just a really good eyes in the Den. So I like it. I'm going to just do a couple of things here because I don't actually know what it is. Oh, this is an Russian internet company. Oh, good eye. Now, what I would say is, on a shorter term basis, it could fill that gap below. It said YNDX is trading at 30.68. Its real name is Yandex NV Class. So this is a foreign company. I'm going to suggest, if you're in it, I think you are, stay long. The stochastic's at 91%. I would suggest adding to it, if you get a pullback between 28 and 27.30, and use that as a trading entry point, because if it goes to 31.5, I would move that whole thing up about a half a point. So that's the way I would look. Congratulations. That's great. We've got Frank in Lexington, Kentucky. Hi, Frank. How are you?
Well, Lexington, Massachusetts, but...
Oh, man, I tell you, you're just a neighbor of mine. Lexington, Massachusetts. We have a beautiful weather.
I ran into a Tom seminar a couple of months ago.
Oh, yes.
Spoke briefly. I have a daughter who's a cellist, and I understand all your musical business. It's wonderful.
Oh, that's great. Thank you. So your daughter's a professional cellist, or she's studying cello?
Yeah, she's a professional cellist. She went to Indiana University for several degrees, and, well, she just had her first baby, but she plays regularly.
Oh, that's fantastic. Yeah, I've worked with cellists for years and years. There are so many beautiful pieces for cello and clarinet. The Brahms Clarinet Trio for it's A clarinet, piano, and cello. That's one of the all-time beauties.
Her husband is a clarinet player.
Oh, he's a clarinet player?
Her husband is a clarinet and a composer.
Oh, so she's probably done all of these pieces before. And she's probably played the Max Bruch pieces, which are arranged also for cello, yeah.
Know what you're talking about.
Great. So, Frank, when we met, you spoke about a stock, or you spoke, tell me just...
Well, a couple of things. I wanted you to take a look at Royal Gold, but I wanted you to take a look at it. I'm going through your slides, and I'm at about 200 and something.
Good.
And I'm trying to figure out where your buy signal comes in, and I think it comes in as you passed point A, and you get to point A, you pull back, and you have an incipient B leg, but the B doesn't, do you put a plus on it there or something, or do you put a plus on it when it gets above the A level?
Frank, that is a great question. Now, let me do this. I'm going to just show the CD right here for a moment for those of you looking in the den, so on Tiger TV. I'm going to slide the slides, if I can figure out where it is. Oh, there it is. And I'm just going to scroll. Oh, there are a couple of cartoons. I hope you enjoyed the cartoons.
Yeah, they're great. Yeah.
Good. Those are cartoons that I drew years ago as part of
Globe. I'm old enough.
Yeah. Well, this is the one I love here is there's on slide 271. I don't know if you've got there yet. There's this guy in the water, and it says, "I'm sure the tide is going out," and he's kind of staring defiantly. And the next minute, splash, and then it says, "Never short the ocean."
Yeah.
So I like that one. So I'm going to do this. I'm going to show a couple of things. I'm also going to try to find how I go through it step by step. You know what? I'll do it during the break. I'll put this away for now. I'm going to explain to you why Royal Gold right now has given no signal other than to say there's a potential buy signal, but there's no buy mode. And I'll explain to you the difference. If you look at...
No, I understand that. I'm there. I'm that far with you.
Oh, you are? Okay, good. So you want you to know about, are you in Royal Gold at all, or are you just thinking about it?
I have a small position.
Okay, good. Folks, we're looking at RGLD. It's trading at 42.11. It's down 0.87 cents, and it's making that M pattern that I was talking about. The low was at 38.63, so it's off the low a couple of points, 1.5 points. I'll be back with Frank straight after this message.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi everyone, we're back, and we're back with Franklin Lexington. Dow's now down 10, S&P's down 245. Yep, got to expect some kind of weakness today. We just had a spectacular move. That would be normal, and after that doji candle just a couple of days ago, this is like a halfway marker. This is an important breathing period. Now, so Frank, a couple of things that I want you to ask you about. But the first thing is, what was the question that you, if you remember, you asked me when we met over at Burlington. That's kind of how I usually remember people.
Well, I think we were talking about your Trader's Corner.
Okay, that's it. Okay, good. I just needed to know that's good. That's usually I'm much better at remembering. The face comes to me as soon as I remember the question because I remember the questions much better. So I've got it now. So this is what I'm looking at. You see, RGLD, Royal Gold, the steepness of the decline from that peak E top at 100.71 in the monthly chart is devastating. It's going to take a lot for it to turn around. It's like you're throwing a heavy stone, and it's just going straight down, and even though there's some branches and everything there, it's so heavy that it cannot find any support. Now, for the first time, the weekly is saying, I'm about to find some support. So in your looking at the charts, what I tend to say is, you want the price movement to emulate what you're looking at in the technicals. So the first bounce from the low of 38.63 on the 26th, that had the stochastic finally cross positive. That's
Right.
the first thing of a buy signal. You want to see the stochastic under 20%. It doesn't have to be, but that's the way I explain it. Under 20% cross positive
Yep.
with the identification of a candle that has made a bottom, only because the next bar is higher than the previous bar, so you get the V bottom. And you want to see the stochastic, the MACD, fast-moving average, start to turn up, and that usually takes a lot of time. But you see that it went to a peak A and then failed and came back. And even yesterday's big move in gold only got it to underneath the previous high of 45.07. So this is not a great candidate for the technique that I love to mention in that CD over and over, where you want to see commensurate follow through on the upside. Think of it as timing. If you, for instance, last night there's passages where we all have to go together. Pop, 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 pop. If one person is just a little bit off, you get like the harp effect, prop, 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 and that's not good. What you want is that everybody's building the momentum to get the pulse exactly right. So in this particular case, you got the pulse. It looked like it was right, and then it failed.
Why do you call that a failure, though? Why
I'm saying it failed for the first time because it pulled back. Look at this one here. And if I go to PAAS,
I'm trying to get back up past A. It just
are you able to see the charts live or not?
No. Well, let me see. Maybe I can log in. Go ahead.
All right. Don't worry about it.
Yeah.
If you look at GG, which is gold core, it had exactly the same thing when it pulled back, but yesterday's gap made a new high. So it's leg B, and it's holding beautifully today. Okay. Do you see the difference? Now look at the weekly chart. The weekly chart and the monthly chart had all those levels on the downside that it kept trying to stop at. Now what you're looking at for the first time is you see each trough in the weekly of gold core. It pulls back, goes up, pulls back, and it keeps trying to find a base. Look at the nice candles from the low of 3 weeks ago to last week to the first time it's trying to touch the 9-period moving average. Now the MACD is trying to turn around. Stochastic here hasn't shown much strength, and that's what I keep talking about. There's too much diversity in the golds. You've got to be a little careful in choosing them, and gold to south has to really spiral. And if you don't mind, if I'm able to do this on Monday, I'll go a little bit more into the buy signal to buy mode. I think it'll help a lot because the chart, the way it has to act quickly is most important. So thanks so much for calling, Frank. Call me again. Let's look at the charts together. Folks, stay tuned for Nico and
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.